All right, how you doing? It is Ernie here, Coach Ernie, and it is Tuesday, November 5th, Election Day, and this is the morning analysis for Azure DTE. There are three things that we're trying to determine. We're trying to determine directional bias, the amount of energy that's coming into the market, and where are our entry opportunities once the market opens. So let's start off with the morning analysis, and we'll do that by going to the screen. All right. So we can see that the market right now is right about where we closed yesterday. That's what these two lines are. Here's the previous. Here's the current price, and this red line is the previous open. So we're flat, implying that the market is going to be flat on the open. All right. Let's take a look at the direction. We are still in a downtrend. This is a Hull moving average 21-day. And it is showing pointing down, as well as price is below the moving average. So we're going to be in a bearish trend. We are in a bearish trend, and so that's our directional bias. We will be putting on put fly. So the next thing to do is take a look at the volatility, big picture. Big picture volatility. Let's see. Let's bring it in here. This is about a 4-year view of the VIX, and we don't need that moving average there. All right, and we can see our volatility is at 22. You can see that I break it up into 3 different zones: Zombieland, Goldilocks, Chaos. We do that so that we can determine the relative or volatility regime and determine the range of widths that we're interested in. So over here is how we gauge that. This has been determined empirically over thousands and thousands of trades, what works best. Since we're at about 22, that means that we should be choosing a range somewhere between 20 and 30. We want to hone in on that a little bit. And so in order to do that, we're going to look at a tool that I use, which is essentially a 50 wide at the money butterfly in the morning, so that we can gauge what the price is. And I've been looking at this for decades, and it will show us what the market is currently pricing in options on the S&P in a wide spectrum. And it will range anywhere from a debit of 5 all the way up to 35. When it's at 35, that means the volatility is super low, or the implied volatility for that morning is super low. If it's at 5, it means it's super high. And so we use this scale here to determine what side of the range that we're on. All right, so let's take a look at that. I need to open up Thinkorswim so that I can set that. I should have had it open already. That's okay. We're running a little late this morning. So, as I said, what we're trying to do is we're trying to, let me get the big head back on here. We're trying to determine the direction, the amount of energy that's coming into the market that morning. So we're looking at VIX, big picture VIX, or volatility regime, small picture VIX, or the implied volatility that's occurring at that moment before the market reports come out. And then from that, determine our exposure to the market. That will essentially let us choose what width ranges that we want to use for our butterfly. We're always putting on an out-of-the-money butterfly in the direction of the market. So we'll also look at economic reports. Often there are opportunities to put on a what we call a big-ass fly, which is a 50-wide fly in the morning, prior to those economic reports, looking to capture that volatility crush that will happen after it. So volatility will rise into those reports and crush afterwards. And if the market stays relatively stable, we'll stay with that trade for the morning session, because morning session tends to have higher levels of volatility. That will give us another opportunity for another volatility crush, perhaps in the afternoon, or early afternoon or late morning. So I'm just logging into the account right now. Of course, you know, getting into Thinkorswim is always a long, arduous process. It has to do all the download of the updates and everything else. And I'm just setting it up, and once I have it set up, I will show you what I'm doing here, get all the dates correct. All right, we're on the 6th. There we go. And the options change, so we'll take a look at this now. So we'll put on at the money butterfly. Right now the market, the strikes are right around 57.50 to 57.55. I'll choose 57.50 on that side of the market. We'll put on a deep and wide, and we'll adjust it accordingly. So there it is, 50. So let's make that 5,700 and 5,800. All right, so the price, as you can see down here, is 23.80. That's sort of fair to middling, in the middle of the range. And let's see what that actually looks like. We'll go to our trading view. And we see that a 23 range is in the middle of this range here. We said 20 to 30 wide, so we'll pick a 25 wide this morning when we open up. So that's it. That's how we determine. Oh, there's one more thing. And we need to go and look at the market structure. Our market structure is determined by an analysis of the volume profile that'll tell us where the levels are that will likely produce support or resistance. We're looking for resistance in this case. We want price to come down. We're expecting price to come down and then pull up into one of these structural levels. When that event occurs between the hours of 9:30 at the open and about 12:30 in the afternoon, which I consider the end of the morning session. It's also the period of highest volatility. So we'll be waiting for an event that looks something like this that will probably come up to here. And once it hits there and shows that it's found resistance there, we'll take that trade short, or not short, but a put fly out of the money, which means that we'll put a put fly down here somewhere once that event occurs. All right. So that's it. That's the entire setup. We're good to go. We know the direction. We know the width. And we already know where our potential setups. Now it's just a matter of waiting for that entry event. And there we are. Thank you very much. We'll see you next time.